Well, good day, folks, and welcome to Hump Day. Let's do a quick update on the markets, and I'll show you what I've been putting up on Twitter. This video is about some of the interesting things that are happening in the market, but we will go through all the charts, including natural gas. Don't worry about that. It is a bit of a tricky one at the moment. Let's have a look at a couple of the tweets I put up recently, and I'll show you a couple of the posts in my members room too. So I'm just going to scan through these tweets or posts on X and bring them to your attention. And if you'd like to follow me on X or Twitter, the links are down below in the description, but you can also go to the handle at ArcisFX on X and follow me there. Make sure you press the notification bell on X as well so that you don't miss the tweets as I put them up. Let's go through these in no particular order of importance. First of all, this one on the 5th of December. If there's one risk that clouds all others at present, it can be expressed in one word. That is what you might glean from the media outpouring of the last few days. Some consider this risk with great upside, whereas others a nightmare. But polls of the Republicans show that Trump's actually the front runner. Just interesting in terms of monetary easing and tightening or whatever next year, and the way the Trump administration, if they do get into power, and it's only the end of next year, the way they'll view monetary policy and spending and deficits and the budget and all that sort of thing. And we know that Trump's a bit of a spender, so that's probably good for the stock markets going forward, perhaps towards the end of next year after the elections. In the meantime, though, we've got to trade this market, and what happens next is more important than what happens after the elections. I put another chart of natural gas here on X, and we'll go through the charts shortly, but we have this megaphone pattern forming, and we're still hovering around near the bottom there. We are actually equally hedged on natural gas, so it'll be interesting to see how this plays out. Another tweet I put up was regarding total vehicle sales. Those numbers came out. They were lower again. This is an interesting and possibly important chart coming up in 90 minutes. That was yesterday. And look at this, since there's the COVID period, and look what happened. We sort of escalated into the COVID period. There was COVID. We dropped off dramatically, rallied back up again. But since then, we've just been turning over again. And this is total vehicle sales, not new vehicle sales, so an interesting economic number. And of course, vehicles and fuel and petrol and oil and electric cars and all that sort of thing make up an enormous part of our new economy. So anything to do with cars, you should pay attention to. Yesterday, we also had the JOLTS job report, and we've got the ADP job report coming up today a little bit later on. But just look at this number in terms of jobs. Once again, there was COVID, a steady rise into COVID, dramatic fall off, big rise thereafter, huge. That was during this monetary loosening period post-COVID. Plenty of jobs created, but look how it's falling off. And yesterday's number was one of the biggest drops for a very long time. And we're at the lowest jobs number on JOLTS that we've been at since just post-COVID. Another one to look at today is Tesla. We're short on NASDAQ in general. We're not trading many individual stocks, but we have gone short on Apple, and we'll be watching Tesla very closely today. We've got this potential island formation. What we want to see is an open today below this 200 period moving average and below the 20 and below this gap. The 200 period moving average is this purple line. And if we do that, we'll have formed an island. It's a classical chart or candlestick pattern, and we should see this price continue to move lower. So we do want to see this open and gap below this morning. And looking at the pre-market trades right now, it doesn't look like we're going to get that. We'll have to see. Maybe, who knows, there's a little bit of time before the market opens, but that's the sort of thing we want to see. We'll be keeping a close eye on that. We are already short on Apple and on NASDAQ. Here's a super interesting one for those who are wondering why oil and gas prices are so low. This is the Russia attack over here. This is the Brent crude oil price. Look how it soared after the Russia attack. And then as soon as the Russians and Putin figured out how to get their oil out of Russia and into Europe without causing any further political turmoil, the price of natural gas and oil just began to fall down. For those of you trading Brent crude, you'll know that these peaks occurred after the Russia attack, and these peaks here occurred more or less around the Israel-Palestine issue that's going on. But since then, the market's just fallen down. An overall downtrend, and we've got an order to sell WTI a little bit lower down, just below the current lows and the recent double bottom. It's interesting, the comment here, partly made up of my own and this other one from Bloomberg. I'll just read it out to you. Perhaps not cheap Russian oil and gas gurgling through the nozzles of European petrol fillers and heating winter homes, but plenty of it nevertheless, and world energy pricing recognizes it. The comment from Bloomberg is designed to reduce funding for the Kremlin's military assault on Ukraine. The sanctions deal agreed a year ago this week included a $60 per barrel price cap for seaborne Russian oil, $24 below the average market price over the last 12 months. Instead, it has fostered a lucrative business for scores of difficult-to-trace traders and shipping companies, and as much as $11 billion a year of petrodollars are evaporating between when the oil leaves Russia and when it reaches buyers, according to trade data. compiled by Bloomberg. So super interesting. No cheap Russian oil, but plenty of it, and that's what's keeping the oil and the natural gas prices down. The same sort of argument applies to natural gas. The last tweet I've just put up a few minutes ago, 16 minutes ago, you can see this is the COT report for the S&P March futures. And just very briefly, the interesting thing is here, we've got 3 lines. The red line represents the hedgers, the market makers. These are people and institutions that need to be in the opposite direction to the overall market, and look how that's dropped off. Then we've got the leveraged retail traders. That's people like you and me, and we make up about 25% of the market. So we may be small fish, but we're certainly a big shoal of them. And that 25% large shoal is starting to pile into the long positions indicated by this purple line. And then the asset managers and funds and institutions have been going up as this market's been rallying. They're generally trend followers, so that's normal. But look what's happened over the last number of periods. You can see we've just turned down, the asset managers starting to go short. So we're seeing this turn in the S&P, and we're currently short on NASDAQ. So that's all the stuff on X. Let's go across to my members Discord, and I just want to see if there's anything of interest there. And you can see here I put up similar sort of posts to what I put on X with a few other additional posts. This is the discussion room, not the trading room. The discussion room actually illustrates all the trades that I take one by one. And then the trade log, which is kept and updated independently by one of my members. So it's not me doing it, so you know it's real at least. It's kept on a different page. Let's go back to the discussion room. The fear and greed index, we're at 67. Let's open that in the browser. If we get to 75, we hit extreme greed. As soon as we start edging towards the extreme greed level, we know that potentially the market might be topping out. You can see I put a few articles in here from Bloomberg and Wall Street Journal and so on, which I'm not going to go into now. One comment on NASDAQ, which I posted yesterday, was this inside trading day yesterday. I didn't put this up on X, but there's yesterday's candle. And actually the day before's candle, the top and the bottom of the previous day's candle, that would be Monday, form the ranges now of a potential breakout zone. Whenever you get an inside day, you can take the previous day, look at the top and the bottom of that previous day, and use those as breakout levels if that's the way you like to trade. So a breakout through the top and a close above there from Monday's candle would be bullish, and a breakout below the bottom of Monday's candle and a close beneath there would be bearish. So if you're into trading breakouts, that's possibly a good play. And then finally here, I got this from the CME group. Let's just have a look at this. This is super interesting. The chances of a rate hike in December on the 13th, as you can see there, are just about 0. I don't recall ever seeing this at 0. In fact, some of these numbers are actually at 0. And if we head over to the future foreseen rate cuts, 31st of January, 20th of March, 1st of May, etc. going forward, none of these indicate that we're going to get any further rate hikes. I think the highest probability is around about 28%. So it looks like we're done with rate hikes for now, and potentially moving into rate cuts, possibly even as early as March. I'm not too sure about that though. Right, having looked at all of that, let's go across to the charts. This is going to be the quickest part of today's video because I just wanted to give you the interesting things. Let's go across from right to left and we'll talk about natural gas. Now natural gas, we've got a couple of things here. We've got a channel line, we've got a breakdown, we've got a weekend gap, we've got faffing around. This is a 4-hour chart, so lots of ups and downs. We're still on this general downtrend really. We're hedged. I have a long position from 286 and I have a short position from 268, equally hedged. So no matter what this market does right now, doesn't make any difference to me. My general idea is to remove the short hedge, close it for a loss if we move above and close above my original entry position. And then if we move above and close above $3 on a 4-hour candle basis, I'll be looking to add more longs. Remember that I'm looking at 4-hour candles, I'm looking at chart patterns, I'm looking at moving averages, all sorts of things to try and time my entries and exits. And I've alluded to that in the video, which I'll link at the end of this one. So basically, no matter what happens at the moment, the market can move up or down, makes no position to my net P&L, but I'll be looking to remove the short hedge at some stage if we move up. And if we move down, I'll be looking to take profit on the short hedge, perhaps down towards the channel bottom, somewhere down in these regions, maybe at around about 2.5. At that point, I'll consider taking profit on the short hedge position and then adding a fresh new long position at those lower levels. The profit from the short hedge, when I close it, if it moves down, will cover some of the risk on the new positions. We're long on VIXY, nothing to say about that. It's just moving sideways, creeping and crawling along the bottom of the page. We've just taken a small short position on Bitcoin. This is just a retracement play, a sort of a retracement to the mean. I think we could get this gap filled. That's around 39,300. We could perhaps get down to 38,000. And switching to the weekly chart, it's possible we could even try some of these lows again with a good strong retracement. That could be down to about 35 or 32,000. I don't think we're going to get below 30,000 again anytime soon, but I am looking for a retracement. So we're short on Bitcoin, really, really close to the top there. And you can see we're moving into some profit as this market moves down. We have nothing on the 10-year yield. We're short on sugar. For those following me, you know we've taken quite a lot of profit on sugar. We'll be looking to exit at $24 and then at $23 and $22. We're short on London cocoa futures. That's moving down nicely. We picked up a good profit on this continuation of the move downwards yesterday. We're looking to hold this down towards the channel bottom. Here's the 50-period moving average on this day chart. And that exit would be around about these swing lows and the channel bottom, which would be around about 3,350 to 3,400, somewhere in that region. So that's London cocoa futures. If you're trading the US cocoa futures, similar sort of structure. And then Brent crude oil and WTI, we have no trades on at the moment. However, as I alluded to earlier, we do have a stop order in place to sell this if we break and close below $72. So when it comes to metals, let's just talk about gold. What a crazy move. We moved up to almost 2,140. We're back down just above 2,000. I've got a stink bid in at 2,000 to see if we can pick up a long trade at around about 2,000, simply because it's a big round number. It's a very strong and powerful retracement. It's a psychological number. And I think we might get at least a bounce from 2,000. So we got an order in to buy at 2,000 on the dot. We have nothing on copper. That came off strongly just to the bottom of this channel line. And actually, if we can hold here on copper, it might be worth trying a small long. Let's see how today closes out, and actually maybe this week. And we'll see what sort of weekly candle we get on copper. But if we do manage to hold this channel top, and this purple line here is actually the 200-day moving average. So if we could hold the 200 and hold the channel top and look pretty constructive going into the next week, and despite the fact that I've been pretty bearish on copper, we might have a chance to buy that. So we'll keep an eye on that one tomorrow, the next day, or next week. And then URA, uranium, we've taken a new long position as we've begun to show more strength, breaking up through this high at about 27.50 and then beginning to move higher. And we've broken above that previous high. So let's see how we go with uranium. I think overall that's quite a long-term play. I don't expect any great fireworks or rockets to the moon on this one, but just a gradual edging up. Perhaps at some stage we will get something more interesting. Right, so we're short on Apple. We're watching Tesla. I'm not going to expand these charts. Nothing on Nvidia, nothing on Microsoft, nothing on any of the other Magnificent Seven. We are short on NASDAQ at about 16,100 and hoping for that to move down. We've taken some profit and our stop loss is at break even, so there's no risk on this trade. We've already picked up some profit, but I'd really like to see this move down towards these two moving averages. That's the 100 and the 50 in confluence, and perhaps even down to the top of this channel line, and maybe even down to the 200-period moving average, which is moving slowly upwards. And we're short on Apple. I'm not going to expand that. And then Tesla, that island reversal I mentioned earlier, we'll keep an eye on that. Nothing on anything else. And let's just take another glance at S&P. I drew this picture in a few days ago, thinking, well, it's kind of pretty, but it's probably not going to work out like anything like that at all. It just looks nice on the chart. But so far, so good, actually. And we fell off the peak of this sort of curve, and we're now bouncing back. Perhaps we'll follow this red path and eventually break down. Failing that, we'll break up through the top and move on to new highs, and then follow this green path here sooner rather than later. And then finally, we're long on euro. That's not looking so great. We spoke about that yesterday. It's in yesterday's video. We're short on the dollar yen. We've taken loads of profit on the dollar yen, and that continues to move down. We've still got one position on this. I'm hoping for a move back up to the channel top, something along the lines of this path, so that we could reload and take advantage of this continued move down. My target for dollar yen is around about 130 to 135 eventually towards the end of this year, and perhaps into early next year. Well, all a bit of a mouthful. I hope you enjoyed it. Have a great trading day, and I'll speak to you in the next video. If you did enjoy it and you like this sort of thing, consider subscribing to the channel. It really helps us out and it helps the channel grow, and I'd really appreciate it. Take care.